Welcome to TradeTheMBI.com. This is Jonas Reports for the 26th of April. And the continuation, we saw that there was just a little bit of weakness here with the steel crossing below, and it's always significant when it comes back above the cyan right here, shorts, and it comes back below at the same time. Shorts were rising. We were having midterm buyer, a little bit of a fade. We weren't worried about support because we knew that we still had a strong move of red long-term buyers well above the cyan, so it was still within the buy configuration, so we were likely to expect ABM yellow value to be a nice support right there, and that was right around the 29.11. What was the low of that bar? 14, so slightly even above it, and just kind of supported back in between there, and we've still been within this rising gold, so it's starting to modify. Now we're getting those higher highs that we talked about looking for on slightly lower shakeout. And it's continuing. We had a couple of positive extremes, and we expected that to just fill back in. And you can see it was from this bar right here, which had a low of 29.08. Didn't even quite get down to that one. It may still get all the way to it. It's just a matter of waiting for it within a daily. This was broader positive action that we've been following, well, pretty much the entire month, so pretty solid. But as we get into the final few days of the month going into the end, like I was saying, we would expect bigger ranges, but not necessarily anything significant from a downside move, just that it was going to be a little bit more volatile, and that's pretty much what we experienced. And that's because the NASDAQ far more positive than even the S&P, and you can see that clearly with that DOC red all the way up at the 13 level. That's pretty extreme from that standpoint, and pretty much in line with what we would expect to see from it. So it's been holding up quite well. There's still significant enough space for a little bit of retracing in there, and that would still be considered positive within these new highs. So we're pretty much fitting in with expectation. Would be better, at least from an S&P standpoint, if the euro weren't taking such a hit, but we know that there really isn't that support within the euro range, given the turmoil that they've been going through. It doesn't mean that we aren't going to come right back up into this, but as I was pointing out before, we had that all the way down to 108 range, and that we broke after dipping back down to retest this low on pretty weak readings, and we're in a consistent continuation range with that orange cut between red and cyan right here, and that usually indicates that you're going to continue in the mode that we were going, which was lower. So pretty much intact for what we were expecting. Gold, we know that even any little pop range that was happening right here, probably not going to fare too strong from a turnaround standpoint, but enough to give it just a little bit of boost to come back and retest the breakout of that low portion, and that's exactly what it's doing at this particular point. From an intraday standpoint, well, we started out decent with that little bit of up move. We ended up with our DOC spreads that came through right at the start here. We ended up dipping down fairly decent to new buy configuration. Came in here with that orange, but didn't last very long, and it was still profitable from the long side. And this is one of those things where whether you choose to take that long coming off of the deep red, or the expectation that you're going to revisit these lows with the dip below the red line, still sometimes they're worth a few points, and they can actually run a little bit further. But right into that 50%, which is right where it came, and then boom, you start to see the breakdown of steel. Already with green was below red at that particular point. So once the orange popped above, even if you waited the next bar where you get clearly orange above cyan, it just was consistent that you were going to expect at least that low to come through, and you get those overdrafts where it comes down, and oftentimes when you get that breakdown, you expect a little return back up to it. So when the new buy configuration came here, was a little bit softer. The secondary one I thought was a little bit better on this secondary pivot coming through right about here, and that was still pretty close to about the same spot. And that'll happen. You just get a little bit of a downdrift, and then boom, it took off, and that was perfect within that read. And then we got to the peak. You had the earlier DOC spread that started right about there, but you had a real huge move from magenta in that. And so even if you waited and let this one bypass completely, that left you this secondary one, which much more attractive because you're at the same highs, much lower shakeout reading, and then boom, when you get that configuration, it's just a matter of waiting for it. And what did it do? It just filled all the way back in, took out everything going all the way back over to here, which was just this initial breakout move. Very consistent with what happens within these kind of range things, but the distance of the range was pretty decent from 15 to 35. I think that's, like I was saying, that increase in volatility, perfect to match our expectations of it. I did mention that I would go through a little bit of the 50K. Let's see, this is the Diocon Paint 2 program as well. So we've been consistently riding with some of these nice moves. We had a couple of little suspect buys that I was talking about here, like this one where I'm still within red vis-a-vis the paint color, and it bought that one. We didn't think that was such a successful choice. The secondary one where the actual paint matched the buy configuration, which was this one, pretty close to relatively the same spot, just didn't suffer any of the downdraft. And that one went all the way through to the end right here, and so that was what, 29.05 to the sell at 30, so 25 solid points on the double setup. Again, red right here on this one, so I didn't like this particular configuration as much, and rightfully so. You can see that it faded, but even with that kind of setup, really hasn't impacted the performance per se. For the year so far, 54% profitability, that's quite excellent. And you can see that we're in the equity highs, and I've been dealing with some of the programming language to adjust for some of those down moves that really we wouldn't be interested in, we've talked about as they pop up going through. And not bad overall. I mean, it's at its equity highs. And this represents that overall movement. Still working with some of the adjustments and still maintaining enough buys that capture overall moves, but it's the language of working out on some of the ones that are weaker and having them exit those a little bit sooner just to modify it. And what that's going to create is a much more consistent equity line that just continues to rise straight up through and continue to make new equity peaks, and that's the key for it. So all in all, that's fairly decent given the modifications. Still don't have even any short derivative on this one yet, so that's just from long standpoint. So all in all, really good stuff. I think improvement wise, just from a consistency and following that Diocon paint, really capturing the breadth of decent runs. So all good from that standpoint. We can see in pre-market here, we turned around just right around that 23%. We ended up with the P2s. We started to see consistent improvement from a shakeout standpoint. And again, you know, anytime I see gold above magenta and all of those lines rising, and then we ended up with gold. And that actually took place right about before here, even before the X2 popped in with the full dip of orange coming down. So capturing that anywhere in between was fine. We didn't have any dips below the red line that needed to be revisited there, so that this supported right around that range is perfect. And it's just popped up. Got a couple of positive extremes in there, and that's filling in right now here, right before the market about to open. So all set for another positive Friday. I'm looking for that 50% to come through. We'll see if that's able to turn into a significant DOC spread. It's just starting. In fact, let me expand that now that we've looked at the whole chart of it. We can kind of get up close and personal to it. There we go. And you can start to see that clean setup from right about here. And then sure enough, the crossover, and that's the current bar that we're in that's creating the actual DOC spread right there from a short context. It is giving us a reset of steel. So the question is, will steel buyers be able to cross back above that red, signaling that any little short move would be over? It's a little, I think, premature on that one from a broader short standpoint, because you just have Azure rising, and it's not usually until those meet that we get more significant fade on that. But that's the long and the short of it for now. As always, though, I will back from RomanNet, so I'll be putting up charts as the day goes on. As always, trade well. We'll talk again later.